A couple came to me last month. They bought a one-bedroom condo in Midtown Toronto in early 2022. Purchase price, $740,000. At the time, that was competitive, but not unusual. They put 20% down, so about $148,000 of their savings, and locked in at 2.1% fixed for 5 years. Plan was textbook. Live there for 3 to 5 years, build equity, sell, and move into a bigger place. That's standard Toronto playbook. Everyone was doing it in 2022. 4 years later, they called me. They wanted to know what their unit was worth. I pulled the recent comparables in their building and area. For their unit type, a one bedroom in Midtown, the comps came back between $600,000 and $620,000. Their $740,000 condo is worth roughly $610,000 today. That is $130,000 less than what they paid in 4 years. And that $130,000 is just a price decline. It does not include the closing costs they paid to buy, the condo fees they've been covering every month, or the land transfer tax. So when you add in all of that, the full cost of owning this unit had been worse than renting a comparable apartment and putting a down payment into a savings account or an index. She asked me if they should hold and wait for prices to come back. I told her what I'm about to tell you. There was about 1,700 condos sold across the GTA last month. And the data behind those sales tells a story that every condo owner in the city needs to hear. 1,700 condo sales in June 2026. That is about 14% more than June 2025. Of every property type in the GTA right now, detached, semi, condo, condos have the strongest year-over-year sales increase. Most people bought condos last month than at any point in the last 12 months. If you're a seller, more buyers sound like good news. I thought so too, but more buyers have not pushed prices up. They have done the opposite. And the reason comes down to one word: inventory. There are 8,000 condos sitting on the market right now across the GTA. Only about 4,000 new listings came on in June. Actually fewer than the month before. So sellers are pulling back on listings, but the ones who listed last month and the month before and the month before that are still sitting there unsold. That inventory has been stacking up for over a year. At 1,700 sales and 8,000 active listings, you're looking at just over 5 months of inventory. To put that into context, a balanced condo market in Toronto runs about 3 to 4 months of supply. Anything above 4 months is essentially a buyer's market. 5 months means buyers have choices. Lots of choices. And when buyers have choices, they do not pay asking price. The sale to list price ratio is 97%. The average condo is selling about 3% what the seller listed for. The average listing is sitting for about 38 days before it sells. In May, that number is 34. So condo is taking longer to move even as more of them sell. The sales to new listing ratio is 37%. That is sales divided by new listings. Anything below 40% is a buyer's market. Anything above 60% is a seller's market. At 37%, the condo market is firmly in buyer territory. That ratio is up from 32% in May, which means conditions are tightening slightly, but still well below balanced. I talk to condo sellers almost every week who tell me they listed 2 months ago and had maybe 3 showings. When I ask what they listed at, the number is always above where the market is actually trading. Not by a few thousand, by 10 or 15%. And I get it. Nobody wants to accept that their home is worth less than what they paid. But the market does not care what you paid. It cares what a buyer will pay today. Every week you sit on the market overpriced, the comps get worse. If you're thinking about listing your condo, get a proper comparative market analysis done first. Not the online estimates, the real comps from your building and your floor plan. That's the only number that matters. If you own a condo in the GTA or you think about buying one, subscribe. I break down real numbers from TRREB every single week so you can make decisions based on data, not hope. And if you can help me reach 1,900 subs, it'll help me keep on making videos just like this. Okay, so we know sales are up. We know inventory, it's massive. We know sellers are sitting for over a month. The question everyone asks, what does that actually do to the price? The average GTA condo sold for about $630,000 in June. In May, that number is $639,000. So month over month, the price dropped another $9,000. Year over year, the average is down 9% from June of 2025. In May, that year over year decline was 6.4%. I want you to sit with that just for a second. The annual rate of price decline went from 6% to 9% in a single month. That's a number that should keep condo owners up at night. The rate of decline is not slowing down. It's accelerating a little bit, but it might be seasonal as well. So this is something I'm going to track. So on a 630,000 condo, the 97% sales to list ratio means the average seller is accepting roughly about almost 20K less than their asking price. That is real money left on the table at every closing. Now the picture changes depending on where you are. Let me walk you through it district by district. Let's start off with Toronto Central, almost 800 sales and average about 710,000. That's the highest average in the city because the core has newer buildings, larger units, and waterfront inventory pulling the number up. But the median is 585,000. When the average is 127,000 above the median, a handful of expensive sales are inflating the top. Most buyers in the core are paying well under 600K. Toronto West, 221 sales at 595,000. Median, 540,000. This is my backyard. For buyers priced out of downtown, the West End is where the deals are landing right now. You still find a 2-bedroom unit under 600K in established neighborhoods with transit access. Toronto East, 133 sales at 511,000. Median, 475,000. To talk about Scarborough, East York, the Danforth, and if you can find a condo under 500K with subway connection in the East End, you're in the strongest value position in the city right now. Outside the 416, the prices are lower, but the declines have been steeper. Peel region, the condos average about 504,000. York region, 587,000. Durham, 483,000. The non-fi absorbed a massive wave of investor-built inventory in 2021 and 2022. Purpose-built rental condos, pre-construction flips, assignment sales, those units are flooding back onto the market now as carrying costs crush investors who cannot cover the mortgage with rent. The result is a wall of supply that the suburbs have not been able to absorb. To understand where we are, you need to see where we came from. In 2016, the average GTA condo was about 416,000. By 2017, 512,000. That's the first big run up. People started talking about condos as investments, not just homes. By 2019, 588,000. Then the pandemic hit. Low interest rates and remote work sent prices vertical. 2020, 629,000. 2021, 681,000. And in 2022, the peak, 758,000. So the average condo in the GTA sold for $750,000. Then the Bank of Canada raised rates 10 times in 18 months. And everything reversed. 2023 dropped to 718,000. People thought it was temporary. It was not. 2024, 703,000. Still declining. 2025, 667,000. Declining faster. And now, June of 2026, 631,000. That's about 127,000 below the 2022 peak, a 16% decline in 4 years. Here's a part that puts it in perspective. The current June average of 631,000 is sitting roughly 1,000 above the 2020 annual average. 6 years of price growth, the pandemic frenzy, the bidding wars, all of it nearly entirely erased. And the year-to-date average, which is running at 628,000, has already dipped below where condos were in 2020. If you bought a condo at any point from mid-2021 through early 2023, your unit is worth less today than what you paid. And every month, that gap actually gets wider. And here's the part that makes this market unlike anything we've seen before. Sales are up 14% year over year. That is the strongest sales growth of any property type in the GTA. Stronger than detached homes, which went up 0.4%. Stronger than townhouses at 4%. The condo sales volume is real and growing, but prices are still falling and falling faster than they were 6 months ago. What is happening is a correction driven by forced selling. Investors who bought in 2021 at sub 2% rates are now renewing at 4% or higher. Their carrying costs jumped over $1,000 a month. The rent they collect has not kept up. Many are bleeding $500 to $1,500 a month in negative cash flow. They are listing to stop the bleeding, and that creates supply. That supply pushes prices down, and buyers who now have more option at any point since 2019 are using that leverage to negotiate hard. The 14% sales increase is not a sign of recovery. It's a sign that buyers see opportunity. They see prices dropping. They see sellers who need to sell, not sellers who want to sell. And they're stepping in at levels that work for their budgets, not the seller's expectation. That is why prices keep falling even as more units trade. So if you're selling a condo right now, price it for today's market. Not where you bought it, not where you wish it was, where condos are actually closing right now. The sellers who accept that reality first are the ones who sell. The ones who wait are chasing a number that moves further away every single month. If you're buying, you have leverage you did not have 12 months ago. Use it, but do not assume the bottom is here. There's nothing in this report that says prices have stopped falling.